Looks like we're covered there. Cool. Well, let's get the party started. Welcome in everybody to today's webinar. Uh, Today we're talking 3-year rate guarantee with policy premium lock. Sorry. Premium lock by Eventual. My guest today is Dylan DiMarchi. He is the co-founder of Eventual. Um, we're the creators of Premium Lock. We've recently, as Canopy Connect, or you guys have built a integration with us. Um, so we're able to get that premium lock quote going directly out of Canopy Connect and it's all part of that whole quote intake flow. So everything becomes really smooth. That's the real high level of it. Dylan, I'm curious as we kind of get into this, and sorry, let me frame this up. Um, We'll do a little banter. We're going to do a little bit of a short presentation and then show you guys like an actual live demo of how this all works, just as a framing. But um, Dylan, what was kind of the genesis of creating this product in the company?
Yeah, well, Ray, first, thanks for having me and Eventual here today. Thanks to all the attendees for joining. I know the life of the independent agent is hectic and chaotic, and so thank you. I know it's not easy to spare, 20 or 30 minutes of the day to get to learn about new products. So I think you guys are already ahead of the curve for joining this webinar. As Ray mentioned, my name's Dylan, one of the co-founders of Eventual, and our purpose of building this product, Premium Lock, which is a 3-year price guarantee for US admitted lines homeowners insurance, is pretty much based on problems that I saw firsthand as a real estate professional in my prior career. As likely everyone knows on this call, a lot of the states from which the agents today have called in from have seen unbelievably traumatic, chaotic growth rates in the price of insurance. Really, it's an inflation problem, it's a weather problem, it's a roof litigation problem, it's all sorts of things, depending on kind of where in the U.S. you exist. But it's frustrating for homeowners to face these dramatic rate hikes, and so we built Premium Lock as a tool to fight back against that, and to also give independent agents some interesting ways to improve retention, differentiate, and stand out.
Gotcha. Now, the last few years for sure have been highly volatile as far as the homeowners insurance rates. I know mine, I think 2 years ago doubled or more than doubled, and that was
As
incredibly
did mine.
frustrating.
Yep.
And yeah, so I like, why do these sort of unpredictable rate increases create such a retention challenge for agents?
Well, I think for the independent agents on this call, they probably already know the answer to that question. They are dealing with kind of a disconnect between how agents and other insurance professionals understand the insurance market and how carriers think about pricing and profitability, while that conflicts with how your average American homeowner who doesn't think about insurance that often and isn't reading up on, the latest in Safeco and Travelers profitability and their rate filings and all that. And so homeowners came from this kind of pre-COVID era where almost all parts of homeownership is a long-term, stable commitment to that asset. They have 30-year fixed rate mortgages. Maybe we're going to have 50-year fixed rate mortgages.
Yeah,
Who knows if that's happening, but that's like a fundamentally American predictable financial product that has been kind of the bedrock of building wealth in the US. And so most homeowners expect that every other part of owning a home and operating a home are that predictable and stable. And so homeowners have no idea why carriers continue to raise pricing in seemingly like kind of random manners. And it does even seem random to us sometimes. We have data on about 20 million US homes. And it's always surprising to see which carriers decide that they're not profitable enough, or which specific customers end up seeing not a 5% price increase, but maybe a 20 or 50% price increase. So I'm happy to share screen here,
yeah,
and
let's
we
do it.
can get into some more specifics around what's driving insurance volatility today. So, as we mentioned, this is a chart across our data, which comprise data that agents share with us when they're quoting premium lock, public rate filings, and then some other data sources of where this hard market is going. Um, you know, Nationally, insurance prices today continue to grow 13% year over year. So, on average, across all 50 states, if you have a homeowner's renewal tomorrow, probably you're going to be seeing a 10 to 15% rate hike. Um, Inflation is 2%, 2.4%. And so there's still this huge lag between where the price of insurance is growing and where homeowners, where every other piece of inflation is going. And so as we can see, it's softened a little, but still 5x worse than inflation is still a really hard market. And so, Ray, as we brought up at the beginning of this call, our inspiration at Eventual for Premium Lock is pretty simple. It was us saying, wouldn't it be nice if, just like a 30-year mortgage, we had longer term predictability in what it would cost to insure a US single family home? It's certainly not a new idea. Cincinnati has had multi-year BOPs for select customers for a long time, very large carrier. Erie, which is a regional carrier, has had a rate lock sort of product for personal lines auto for a few years now, and they've grown a ton as a result. If you look outside of the US, it's also not a new idea. Japan um, has had multi-year, 5-year dwelling fire policies forever. And, they used to actually have longer term policies. And so our unique ticket Eventual and what Premium Lock actually does is rather than building a new carrier that offers multi-year insurance that needs to replace all your clients and you guys would have to stop, all of you independent agents would have to swap and stop writing your existing carriers. This is instead just a supplementary product. It's a price guarantee that works alongside your existing 1 year home insurance policies. Homeowners keep paying their carrier as usual, and then they pay an additional, call it $10 to $20 monthly fee for premium lock to us. And then we guarantee that their insurance won't exceed a certain threshold over the next 3 years. So we're just forming views of where we at Eventual think carriers will set pricing. And this is a way for homeowners to enjoy the benefit of predictability and more predictable prices for 3 years. As we'll get into, we're super excited to announce this partnership with Canopy. We were Canopy customers long before this partnership. It's an amazing tool. And while today Premium Lock is already, in my view, the quickest to quote supplemental product on earth, about 30 to 60 seconds. We'll get into how our Canopy integration turns that 60-second process into a one-click process, which is awesome for the agents here. Premium Lock, it's available in all 50 states. And again, it works with any admitted lines home insurance policy. So what we do logistically behind the scenes is for each home insurance customer that an agent brings to us, we predict where we think their home insurance prices will go. If the carrier raises the price of insurance over that threshold, we take a loss and we reimburse exactly that amount of premium that's above that back to the customer. And so, kind of just like that, by layering on Premium Lock, you guarantee that your insurance won't exceed a specific threshold. Essentially, it won't get too expensive. Um, Another way of looking at this is kind of what a customer would experience without Premium Lock. And so we show that here on the left. Say they come to us with 2 grand of premium. Maybe this customer's in Florida. Florida is a little bit of a soft market, so maybe they enjoy a price decrease and then maybe prices go up. On the right is the reimbursement that that customer would have gotten if they had Premium Lock. So any premiums that go above that fixed threshold at any point over the next 3 years are simply reimbursed from Eventual back to your homeowner customer. We do that within 2 business days of seeing a deck page. And so the customer can enjoy payouts and enjoy that their insurance will certainly not get too expensive. Um, of course, Premium Lock is flexible for the majority of kind of common occurrences in homeowners. So it works across any admitted lines policy. Insureds can bring it with them from carrier to carrier. So if you're on a Safeco HO3, maybe you get non-renewed, maybe you're in California. If you end up on, let's say, a Travelers HO3, you can bring Premium Lock with you. Our monthly fee and our payout threshold don't change. It works for any form, so it can be an HO3, HO5, condo unit owner policy, DP3, DP1. It's super flexible. Even if your insured has a home insurance claim during the 3-year term, the carrier's likely to raise the price of insurance. If that goes above our payout threshold, we'll still pay out to the customer. The only things that really we carve out and would just reset the payout threshold would be if the insured starts, dramatically changing their coverages. So if they come in with a big deductible, buy premium lock, and then drop down their deductible. Obviously, if we paid out for that, everyone would lower their deductibles and go back to a $500, $1,000 deductible. So it's a pretty simple product. And it's really even simpler to describe for agents. Um, Premium lock can be sold at point of sale. About half of our business come from agents marketing this as a way to differentiate and stand out and say, hey, our, ABC Insurance offers a 3-year price guarantee. And so it's a 2 sentence script, right? When you're about to finish binding, that home insurance policy, you can say, by the way, home insurance prices continue to grow in Colorado and Minnesota and California and Florida. We recommend adding premium lock. It's a 3-year price guarantee. It costs, X dollars per month. It's usually about 10 to 20 bucks, and it guarantees that your insurance won't exceed this specific level. And we quote bespoke and dynamically for every address in America. And so agents are just living in our portal and making this a core part of their renewal process. Yeah, so I think we'll pause there, Ray.
Yeah. Super simple, at least to sell it and to kind of position it and give you kind of that advantage. Um, Curious on whether or not people can switch carriers or shop carriers, or is this like specifically does this tie me into using that carrier that we initially wrote with, even though I'm like I
Yeah.
could save them a little bit of money if I.
It's a good question. Yeah, it's carrier agnostic. And so that is a unique selling point here. And one of the reasons why agents love selling this, because you don't have to stick with a specific carrier. You can still enjoy the benefits of being a truly independent agent. So yeah, as long as you're, not upgrading forms from carrier to carrier, you can bring it with you from any admitted lines carrier to another if you're non-renewed or if you just find, a better price elsewhere. So super flexible. That's a huge selling point for customers as well. I think what we've seen as a result of some of these terms is that, to pull up the slides again, homeowners just crave this predictability. Again, referring back to the other financial products that they're used to. They wish that they could have had a 30-year home insurance policy. There are a lot of reasons why that should never exist. You'd have to charge 10x more and the carriers probably wouldn't make any money. But we're super busy all over the US, pretty much everywhere there's population, because customers just are so exhausted of the inflationary period that we've been through
Yeah.
over the last 5 years. And then, Ray, further to that question, talking about the terms and then kind of how agents can benefit from this. We've seen some really surprising kind of results from some of our top performing agents. For a product that only adds 5 to 8% more to the customer's home insurance premiums, retention goes up dramatically. As we talked about at the start of this conversation, retention is a really important way to grow your business overall. And so many agencies that get appointed with us every single day of the week come in with 80, 85% retention, meaning that they have to grow 15, 20% every year just to keep their revenue the same. And that's really hard. A business that grows 20% a year is a high growth business. So Premium Lock just mathematically fixes that problem because you turn a 1-year customer into a 3-year customer. And
Yeah.
so you really earn that loyalty by being an innovator and by being a relatively early adopter of this product. Of course, we pay our agents to distribute the product as well. So agents add a commission onto the monthly fee. And then we also have agency rewards, which get paid to the actual, not just to the agency, but to the actual agent or producer or CSR, whoever is doing the work of selling it. So yeah, it's a great way to pay your employees a little bit better for a tool that takes maybe 2 or 3 minutes of your day to sell. I haven't done the hourly or the hourly equivalent math, but maybe the $20 rewards. It's a pretty high hourly rate if you're cranking out premium locks.
Yeah. Um, so Gary asked a good question here is like, how do you manage the objection to a question, right? Hey, this is an extra $180, $200, $240 a year. Um, how do you sort of position that? Because you're saying like I'm going to be paying you $200 more a year for the next 3 years in the
Yep.
hopes that my rates don't go up $700.
Yep, it's a good question. We provide a lot of tools in our quoting portal to help customers understand exactly when they're likely to get payouts. And we actually share all of our data with our agents, and they can share that verbally with their customers to give context on what a payout could look like. You know, in the quoting page, we share data on your specific state, how much prices have grown over the last 3 years, how much prices continue to grow today. Usually, those data are only a couple weeks stale. And so that's really helpful context. Overall, customers tend to get reimbursements as soon as year two for this 3-year product. And so one of the stats that we look to as illustrative of like whether or not customers want a multi-year kind of predictability tool like this is our conversion rate. And we're seeing roughly 40% conversion rate. So if you are an agent and you're quoting 100 premium locks, in a week or in a month, you'll sell 40 of those. And that's high, not just for a supplementary product, but really for any sort of risk transfer product. And so that means that customers have real willingness to pay. And it's effectively the only tool that can give them multi-year predictability with their existing home insurance policy.
Yep. So it's a bit of positioning predictability or stability over potential variability, and it depends on kind of the client's tolerance for
Exactly.
that. So,
Yep. Yeah. And the scripting, we'll get into the Canopy integration demo in a second, Ray, but we can pull up where some of that scripting exists. I know, Gary, you had that question about kind of, I have to pay more. How does that work? We'll walk through some of that scripting as well. Something else that's interesting is I know not all the states that everyone is calling in from today are soft states, but our view is that the world is continuing to decelerate. And so in Florida, for example, which is definitely the softest state in the country, prices are only growing about 6 or 7% a year today. Um, it's actually easier to sell premium lock when you get a price decrease for that customer. So if you win that customer away from a competing agency and you say, "Hey, we saved you $400 on your home insurance, on your, maybe $3,000 home insurance policy," that has actually been one of the fastest growing sorts of demographics that buy our product. Is the agent can then say, "Hey, we won you a cheaper home insurance policy. We reshopped you. We did our job as agents. Now let's roll out premium lock. You're overall still saving money, but we're going to guarantee that you're not going to return to that expensive, unpleasant price at which you were, yesterday."
got it. Got another question here from Matthew. He asks, he said this is maybe an example scenario.
Yep.
You've got an admitted home policy that ultimately gets canceled for claims or something, and you have to move it to an ENS carrier. Does that still cover it, or is it now it's like, oh, that's a different policy
Yeah,
that's outside
Matthew.
of the ENS?
Yeah, it's a good question. I don't know where you're calling in from, but if you're in California, this is probably a scenario that you're unfortunately still seeing a lot of. Rates have not grown as much as they should have over the last few years, and so we're still seeing a real lack of admitted lines activity there. For the rest of the country, non-renewal rates having to go to ENS have remained generally flat over the last 6 years. It's about 1.1%, and it's been flat. So, for the 1% of customers for whom that happens nationally, Premium Lock only works with admitted lines policies. And so if you're admitted, you get non-renewed and you have to go ENS, Premium Lock just turns off. But one of the customer favorable features here is that it's pay as you go. So if your customer is paying monthly, they can just stop paying and they'll just turn off Premium Lock. It's not like they've paid for 3 years of it upfront and lost the usefulness of it for, year 2 and 3. But again, to be super clear, we have better data than pretty much any other market participant. And our view is that fortunately the admitted lines are coming back. California is going to take, maybe a year or two more, but overall ENS market share should start to drop down.
Got it. And are there any penalties for canceling midterm or anything like that?
Nope. No penalties. It's just pay as you go. It's monthly.
Okay.
I see Bobby had another question about if renewal premium goes down. Yeah, it's a good question. I think that's why we like to show kind of this example is the customer still is paying for their insurance as usual. So, I own a home. I have USAA as my insurance policy. I also own Premium Lock. I enjoy the benefit of my home insurance price decreasing because I just still pay for it as usual. If a customer wants, because it's pay as you go, they can just, if their premiums go down, they can just terminate Premium Lock and reset a new one if their prices go down a bunch. So that pay as you go feature is really customer friendly.
Gotcha.
Yeah, maybe before we rip through the rest of these questions, maybe we just share the Canopy integration, show how the quoting process works,
Sure.
and then we can get to the rest of the Q&A if that sounds good.
That'll be great. Yeah.
Okay. Cool. So I'm pulling up my Canopy dashboard here as an agent. I think most agents tend to put, their link right on their landing page, but I'm just going to pretend like I'm going to send my link directly to my insured. This is what it looks like if you're an insured sharing data. Let's say we're going to use Safeco. I'm going to pretend that I'm logging into my Safeco account. Okay, that password has been used, but you can ignore that. Great. We're going to finish. We are going to go back to our dashboard and go to submissions. And now you can see Clark Kent just submitted as a new customer. So I, as an agent, have now collected all of Clark Kent's info across, his auto, homeowner's umbrella. So I'm going to scroll down, and with this Canopy integration, now we see Premium Lock right there. We're just going to send to Premium Lock in one click. And so no inputs need to be completed to complete this quote. It'll just automatically show up in your Premium Lock dashboard. And that's it. It's one-click quoting. So I know there was a few questions about commissions. And so right here on the quoting page is everything you need to see, including the commission. So up top, it's a set your own commission. So right now we would be charging the customer $14 a month. Agents can go in and add or subtract commission. About a third of our agents don't set any commission because it makes the product more expensive. That's because they want to use this as a marketing tool to stand out, differentiate, win new customers, and to make it convert as efficiently as possible. The other two-thirds of our agents, especially our larger regional and national agencies that use this, usually set $3 or $5 a month of commission. So you'll be getting, you're not gonna retire off of this product, but it's certainly low hundreds of dollars of lifetime commission. We can bill monthly or annually, credit card or ACH. Again, the customer's info is pre-filled here, their email, their name. We have the script that you can share once you save this quote. And it'll say, hey, Premium Lock, we recommend adding it. It's $19 a month. Guarantees your home insurance won't exceed $2,900 over the next 3 years. From here, as an agent, related to some of those questions about when will it pay out, you can use this tool to say, if insurance prices grow X% a year for the next 3 years, how much is this customer likely to get back? And so this helps you understand kind of when you're going to hit that payout threshold, almost like a deductible. So this customer would start to get a payout. This is a pretty aggressive one. If insurance prices grow only 6% a year, the customer would get a little bit of a payout. If prices grow kind of in line with the national average, let's say 13%, the customer would get $900 back. So a couple hundred in year two, $700 in year three. And then let's pretend this is a California customer, something crazy happens, their premium double. They're going to get their full reimbursement back in renewal one. And from here, agents can send this off to their customers however they want. If your customers are good at email and good at buying things themselves with a credit card or ACH, which, as most of you know, most customers are not good at that, but you can send the quote to the customer from us, one click. It'll say it came from your agency, and they'll have a button to click. So you'll get that little success thing. You can copy a link, and the customer can purchase it themselves. It'll again be co-branded, but the vast majority of our agents just purchase it for the client. And from here, you can just enter their credit card or ACH numbers on their behalf if you get it over the phone. Ignore my credit card numbers. And we'll just pretend like this is a transaction we're going to do. We're all based out of New York, so we'll just use our office address here. And once you click purchase, that's it. You're done. You've purchased Premium Lock, and you're good to go. And then from there, all you have to do as an agent is share deck pages once a year. Those deck pages are our source of truth for payouts. And so again, that's a minute to quote and sell that. And it's about a minute of effort once a year to upload those deck pages. So it's a pretty clean, quick integration. Outside of the Canopy Connect integration, it was about 6 questions to fill out. And so while it's already pretty quick without the Canopy integration, you essentially just get to skip the manual labor that someone on your team has to do to quote, and you don't have to fill out these 6 fields, which are straight from the deck page. Canopy does it on your behalf so that you don't have to do that lift. So we love the integration, and it should save, agents a ton of time, because most of our agents that are successful are quoting this for every single customer, whether it's a brand new customer or a renewal customer to enjoy those benefits.
Got
Um,
it. Is
yeah,
there some sort of, sorry, is there some sort of portal for agents to see which of their clients have purchased it and all that stuff? Is that
yep.
something you show?
Yeah, exactly. So agents would get appointed directly with us. And so in this demo portal, you'll see a list of your active and pending customers. You'll see a list of tasks. You can set your commissions. You can view marketing materials. You can turn on your integrations here. You can see how many points you have. You can make sure that you're getting your commissions paid to the right place. See activity across your whole sales team, and then onboard or offboard anyone from your team. So it's a pretty simple, clean portal to manage all of that.
Got it. Um, and then Justin just asks, like, so every year you guys or the agents need to upload a current deck page,
That's
and
right.
even if it's not triggering a claim or anything.
Yep. Yeah, the deck page is our source of truth. Agents don't have to think about is a payout owed to the premium lot customer or not. We do that work. We manage delinquent payouts. So again, it's like we are almost servicing the client on your behalf. I know there were some questions about easy links and some other integrations, and so Canopy is a great place to start creating that quote automatically. We are also going to be integrating with Ivans shortly, and that will help for the subsequent steps. So to download into your AMSs to show whether or not your specific customers have Premium Lock, to save the PDFs that get generated, save the product ID for each customer, and then we can also do book roll, which will help customer or agents rather share those deck pages automatically. So while again it's only about a minute or two of effort once a year for each customer, I know that for those of you with really big customer lists, that's a lot of time. And so yeah, the Ivans work we expect to come late March, so pretty soon. Within about a month and a half.
Gotcha. That's great. Um, what are we looking at here? Are clients able to push this over to like es mortgage escrow impound thing, or is it just primarily just this ACH?
Yeah, we get that question a lot. Again, I have a loan on my home, and I do not pay premium lock through escrow. Ultimately, it's a question of how much time your customers and you have agents um, are willing to invest to get Premium Lock up and running. Today, Premium Lock is not paid through escrow, but generally we found that that's not a common objection from homeowners. Homeowners understand that cash is fungible. So said another way, the cash that lives in their specific escrow account doesn't matter really if it's in that account or in their other pocket, in their personal savings account. And so ultimately, customers are okay with that. And so while your home insurance prices may increase and come out of your escrow account, we're still reimbursing them. So it's a little bit of a left pocket, right pocket concept. Over time, we hope to build some relationships and get this built into escrow, but it takes a long time to get that integrated. And so most customers have been totally happy going without the escrow integration.
Got it. Which states do you guys work in? All of them?
Yeah, so Premium Lock is available in all 50 states. Um, we tend to be large in states where they have seen real insurance volatility. So I think today we have real distribution and customer scale in about 30 states. But yeah, the product's available across the country. Um, Pretty much the West Coast has seen price increases due to some regulation issues and due to wildfires. Kind of everything in the middle that's not coastal has seen, severe convective storm, wind and hail exposure, and so prices have gone up as a result of that. So, your Arkansas, for example, we're really big there because prices have gone up a bunch. Your kind of southeastern coastal states have seen prices go up as a result of hurricanes. So, yeah, we're pretty much active everywhere in the U.S.
Got it. Terry asks whether or not you share that client info, the deck pages, with any other entity for any purpose, even your modeling or whatever.
Yeah, so we use those data internally to make our models better and to make the product less expensive. So the better we can predict where insurance prices go, the better this will convert for customers. We don't share any customer info outside of our platform. Of course, from time to time, we publish research about where we think insurance prices are going. Those go externally, but of course, there's no, customer level data that
It's,
is shared with anybody. Of course, we could never sell like contact info or any of that because that would Canopy, like that's a core pillar of Canopy's business is to have
yep.
great privacy permissions, and so we are in the same boat. And B, if you were agents and we did that, we would like agents should never sell a product that distributes personal customer info. So it's a good question and
Yes.
the right thing to be asking. But yeah, of course, we would never share that info.
Yep. Um, Justin asks, how do we quote if we get information outside of Canopy Connect? Let me first say you should use Canopy Connect with every quote, but sometimes you don't. How do we address that?
Yeah, so at the end of this call, I'll put up a QR code that all of you can scan. That'll take you to our agent landing page where you can click to get appointed and book a time with one of our sales professionals to get you up and running. Each person on your team gets a login to our Premium Lock quoting portal, which I'm showing here. But yeah, to create a quote, if you unfortunately don't have a Canopy customer, is you just click create a quote, you enter an address, you enter a carrier. You enter how much their premiums are, coverage A, all other perils deductible, and then when this home insurance policy expires. And that's it. So it's straight from a deck page. Usually you just pull up your AMS, or you pull up, if your AMS doesn't download very well, pull up the carrier page, click generate quote. I'm getting yelled at because I always use this sample address in Hawaii. And that's it. It'll take you to the exact same spot as Canopy did, but it added another 20 seconds or so. In the future, the Ivans functionality, the book rule functionality will also enable you to just have all of your customers pre-quoted as well.
Yeah. And you can use this, like you can initiate a new um premium lock quote midterm, right? You've got your current book of business you can certainly turn around and sell this to.
Yep, that's exactly right. It's a good question. The strategy that about half of our agents use is to help them differentiate and stand out because being an independent agent is a super hard business. You are appointed with the same set of carriers and usually selling the same set of forms as your competitor next door. And so it's really hard to differentiate, stand out, and compete. And so as a relatively new business, we were founded in 2023. Not all 100,000, homeowners agents in the US yet sell premium law. And so, because of that, agents tend to market whether you're using referrals, whether you're coming from lenders, whether you're doing search ads. They tend to lead and run these marketing campaigns that say, our agency now offers a 3-year price guarantee. And so, to answer your question, Ray, that means that about half of our agents are selling this right at point of sale. They'll go through their comparative rater, they'll go find a couple quotes, they pick a quote when it's about to be bound. Right on the phone call, usually those agents will say, hey, by the way, we got you a great quote. Let's add premium lock. Prices are going up. Let's make sure that this home insurance price doesn't get too expensive. The other half of our agents tend to do this, usually on the service side. So both, CSRs and agents or producers can sell this. And at the service side, they'll see that a renewal deck page has come in. Maybe the price of home insurance went up or down or sideways. And at that point, that's a good opportunity that agents like to reconnect with the customer, get that dialogue, see if they can cross sell the home with the auto, with the umbrella. And then the premium lock is a very natural point to bring that up. Some of our agents sell at midterm as well. So usually when our larger agencies get appointed, they'll send out a marketing blast to all of their, hundreds or thousands of customers saying, you know, we now sell a new product. We offer a 3-year price guarantee. Reach out if you want a quote. And so, low double-digit percent of our customers come midterm. The only thing to note is that if you're within 60 days of the home insurance renewal, we just want you to make sure you're entering the new deck page when that renewal comes up. That's just to make sure you're not entering, stale info that has already been renewed by the carrier.
Got it. Got it. Got a question here about getting appointed. So maybe you can walk us through that process. And Liz specifically asked if there's a cost to get appointed.
Yeah, yeah, great question. No cost to agents. I think that would be a red flag if we had to get paid to use it. We make money by having our agents be successful in selling premium lock. So yeah, there's no cost. It's that makes it pretty low risk for agents to get up and running. The only cost in my mind is the cost that of time that you have to invest to get good at selling premium lock, to understand it deeply. But again, there are two terms. It's the monthly fee and the payout threshold. And we give all that scripting that's really helpful. So yeah, no cost. Next steps, Ray, I think you put our link just in the chat right now. You can also just scan this QR code and it'll take you to the same place. But yeah, we've already had a ton of agents get appointed through this Canopy relationship. Many of them have been successful and up and running pretty quickly. So we look forward to getting the rest of you on this call. If this sounds like a great way to grow your business, improve retention, differentiate, maybe save some time for your CSRs, then we look forward to meeting many of you soon.
Yeah, and God, just to be clear, like there's no cost to start to get appointed. You can earn a little commission if you want to, or you can use, you can chalk it up as a marketing, retention tool. Retention, like it's so much harder to get new business than it is to retain your current. Like we all like there's metrics out there. I don't know them off the top of my head, but we know on order of magnitude, like retaining your customer is, unless they're a bad customer, but that's a whole different story. But retaining that customer is going to be way cheaper than trying to go out and get that net new customer. But when you do get that net new customer and you can lock them in for a period of time, uh, huge benefits and a huge, for your company's growth. So seems like a no-brainer to me. I think you guys got a great product, so I really appreciate you taking the time to share this. And again, click on those links if you want to get appointed and learn more about all this stuff. But yeah, thank you everyone for joining. This has been really helpful, educational, and really appreciate it.
Awesome. Well, Ray, thanks for having us again. Super excited about the partnership. And yeah, thank you to all the agents who joined this. I'm sure I and many others on the team will be meeting many of you maybe tomorrow or next week. So thanks again for the time and good luck with the rest of the day and the week.